meeting for February 8th to order. Our first item on the agenda is a hearing on House Bill 2105. We've got a little bit of an unusual circumstance here, so let me try to explain it to you and how Eileen is going to brief it. HB 2105 came to us late last year. There were some concerns about it, and so the proponents worked during the off-session, whichever one you want to call it, and came up with a compromise that they all agreed upon, is my understanding. And so you have in front of you a bill brief that Eileen is going to explain to you that also includes the balloon that was handed out, so that we're not dealing with two separate bills and then trying to, ultimately what we want to end up with is HB 2105 with the balloon. And so I thought it might be appropriate to have her try to explain both of those at the same time. So Eileen, would you give us a brief?
Oh, you can, you know what, keep it. They're small. Thank you, Mr. Chair, members of the committee. Ordinarily, I will say that I have a brief. This one's not so brief, but it is what it is. So House Bill 2105, as you said, was further amended by the House Committee and would enact the Kansas Earned Wage Access Services Act. The bill passed out of the House Committee of the Whole on March 26th on an original vote of 108 to 13. I'm going to go through kind of the balloon and the bill itself at the same time. So Section 1 provides the citation to the act. The balloon proposes an amendment to make certain entities exempt from the act. My understanding is this was a request from the KBA. The amendment would state that the act exempts a bank holding company regulated by the Federal Reserve, a depository institution regulated by a federal banking agency, or a subsidiary of either of those two entities if the subsidiary directly owns 25% of the bank holding company or the depository institution's common stock. Section 2 provides the definition section of the bill. During the portions of during the amendments, portions of the defined terms were stricken and are being added in again on the balloon. You can see an example of this occurring on the definition for commissioner. Essentially there we struck, or the House Committee struck, or the Deputy Commissioner of the Consumer and Mortgage Lending Division of the Office of the State Bank Commissioner. We added back in, or designee, who shall be the Deputy Commissioner of the Consumer and Mortgage Lending Division of the Office of the State Bank Commissioner. So it essentially says the same thing, but it is coming back into the bill. I'm going to call out some of the definitions that seem to be relatively important to the understanding of the bill. The first one is consumer-directed wage access services. That definition from the bill itself has been simplified to state that it is the offering or providing of earned wage access services directly to consumers based on the consumer's representations and the provider's reasonable determination of the consumer's earned but unpaid income. And then we have earned but unpaid income that's been amended. That term has been amended to add salary and other incomes to the type of income to which the bill applies, making the definition of earned but unpaid income to mean salary, wages, compensation, or other income that a consumer has represented and that a provider has reasonably determined to have been earned or to have accrued to the benefit of a consumer in exchange for the consumer's provision of services to an employer or on behalf of an employer, including an hourly, project-based, piecework, or other basis, and including where the consumer is acting as an independent contractor of the employer. Here's the one that probably fits in to explain what the bill does. And earned wage access services means the business of providing consumer-directed wage access services or employer-integrated wage access services, or both. The Employer Integrated Wage Access Services means the business of delivering to consumers access to earned but unpaid income that's based on employment, income, and attendance data that's obtained directly or indirectly from an employer. 3 new defined terms have been added to this section. You can see these in the big box on page 2. Those definitions are for fee, member, and nationwide multi-state licensing system and registry. Here also, we have the definition for non-recourse, meaning that a provider shall not compel or attempt to compel repayment by a consumer of the outstanding proceeds or fees owed by such consumer to the provider through any of 3 means. And those are a civil suit against the consumer, use of a third party to pursue collection of fees on the member's behalf, or sale of outstanding amounts to a third party collector or debt buyer. The obligor is an employer or other person who employs an individual in exchange for a consumer's provision of services to the employer on behalf of the employer, including on an hourly, project-based, piecework, or other basis, and including where the consumer is acting as an independent contractor of the employer. Section 3 requires registration as an earned wage access services provider with the OSBC. Section 3 also specifies the information required by the OSBC for registration as a provider. This section requires the bank commissioner to prescribe the form and content of the application for registration not later than the first day of the 6th month, beginning after the effective date of this act. The section also provides that any person who provided earned wage access services as of the first of this year may continue to provide those services without registering if the person has filed an application in the meantime for registration as a provider. Section 4 lists the requirement that an applicant or registrant furnish a surety bond that's payable to the OSBC and provide that the bond may not be terminated without 30 days prior written notice to the commissioner, and provide that the bond shall not expire for 2 years after the date of surrender, revocation, or expiration of the applicant or registrant's registration. The bond needs to be in the amount of $100,000. Section 5 lists some requirements for providers of earned wage access services. The registrant is required to provide all proceeds on a non-recourse basis, develop and implement policies and procedures to answer questions and complaints from consumers, and provide certain disclosures of consumer rights, services, and fees. Additional requirements and strictures that are placed on the registrants are listed on the biggest box on page 6. And you'll see that page 6 has quite a large box containing all that information. If you flip the page, this is a duplicate of page 6 that continues the rest of the amendments to that section. The contents of the original section 7 of the bill that was further amended by House Committee, those have been stricken and new language appears in the large box on page 7. These new provisions of the section carve out certain exceptions from current law for earned wage access services. These provisions include a statement that earned wage access services provided by a registrant shall not be considered a loan or any other form of credit. Section 8 is mostly complete and unamended from the House bill that was passed. It states that each registrant shall file an annual report relating to the earned wage access services provided by the registrant during the prior year. The commissioner is able to publish aggregate annual report data for multiple registrants in composite form. This section also requires the registrant to provide a written report explaining the occurrence, cause, and impact should any event on a list of events occur. Section 9 requires that a registrant maintain and preserve complete and adequate business records and records of each earned wage services contract during the term of the contract and for 5 years from the date on which the registrant last provides proceeds to the consumer. Section 10 authorizes the commissioner to deny, suspend, revoke, or refuse to renew registration issued pursuant to the act if the commissioner finds that the applicant or the registrant has engaged in certain activities or if certain conditions occur. The registrant or applicant is entitled to notice and an opportunity for a hearing conducted in accordance with the Kansas Administrative Procedure Act. Section 11 describes the commissioner's powers, duties, and responsibilities in administering the act and provides that certain information that comes into the commissioner's possession during examinations or investigations shall be considered confidential and not subject to the Kansas Open Records Act. Section 12 authorizes the commissioner, after notice and opportunity for a hearing, to issue any number of orders, any number of certain orders, depending on when and if the commissioner finds that a person has engaged, is engaging in, or is about to engage in any act or practice constituting a violation of the act. Section 13 allows the commissioner to order a person to appear before him or to provide documentary evidence if the person has refused to obey a subpoena that has been issued by any court of competent jurisdiction. Section 14 states that it's unlawful for any person to violate the provisions of the act or rules and regulations promulgated thereunder, or any order issued under the act, and it provides for any intentional violation to be classified as a Class A non-person misdemeanor, and penalties will scale up based on subsequent violations incurred by the entity. Section 15 states that the commissioner, the attorney general, or county or district attorney may bring an action in district court to enjoin any violation of the act. Section 16 provides that all fees collected by the commissioner be subject to the provisions of KSA 75-1308. And if approved, the bill would take effect on July 1st of this year. And with that, Mr. Chair, I can stand for questions.
Eileen, thank you very much. Committee, are there questions? I see none. Thank you.
Mr. Chair, I had one.
I'm sorry.
Thank you. Sorry, Eileen. Didn't get to leave yet.
Make that away.
Almost. So just a point of clarification. Thank you, Mr. Chair. Procedurally, we are hearing House Bill 2105 plus proposed amendments, or what is this hearing on? Because usually proposed amendments are when we work a bill, so, or is this what passed out of the House, or where are we procedurally, please?
Okay. So procedurally, we had House Bill 2105 come to us late last session. We did not have time to hear it or work it. And then I was contacted by the proponents of the bill that said that they had some additional work that they wanted done on the bill. So what we've attempted to do to save you time and energy is to explain to you in combination House Bill 2105 and the proposed balloon. So if we decide to work the bill, we would adopt the balloon, and the language that she just briefed is what was covered in the balloon. I don't think there's any interest in working the bill if it stays as the original House Bill 2105.
Thank you, and I had heard that explanation earlier, so I didn't mean to imply that I wasn't listening or didn't understand that. So this language in these balloons, the House has not seen or voted on, is that correct?
The House has not voted on that balloon, is my understanding.
Correct, because the bill is in this committee. The House passed the underlying bill
As this.
amended by House committee.
Right, and so this, the House hasn't seen or voted on.
Correct, it would go back across the floor for consideration.
That was my question. So yeah, the House hasn't seen or voted on this. Okay, thank you. But we're hearing that today. Thank you.
All right, any additional questions for Eileen? Okay, thank you very much. We'll now turn our attention to the proponents. Via WebEx, we have Jay Scheinman, Government Relations Manager with Active Hours Incorporated. Jay, are you with us?
I sure am, Mr. Chairman. Thank you for having us today.
Jay, if you could limit to 3 or 4 minutes, that would be helpful. We have a lot to get through today.
I certainly can, and Eileen did a magnificent job of kind of setting the table already, so I won't go into much detail. Mr. Chairman and distinguished members of the committee, thank you so much for having me here today. As noted, my name is Jay Scheinman, Government Relations Manager for EarnIn. I'm also joined by my colleague via WebEx, Ben Larocco, Senior Director of Government Relations. We're here to testify in support of HB 2105 and the noted amendment. This bill, as Eileen noted, regulates, codifies the earned wage access industry, also known as EWA. This bill, Mr. Chairman, as you shared, is the result of years of negotiation in both Kansas, across the country, with input from dozens of EWA providers, regulators, legislators, and consumer advocates. Similar bills have been adopted in Nevada as well as Missouri. A little bit about EarnIn. EarnIn is one of the largest EWA providers. It is a voluntary product. We work directly with consumers, but also have partnerships with large organizations such as Home Depot and Walgreens. Last year, 11,000 Kansas residents utilized EarnIn, and 27,000 have utilized EarnIn in the state historically. Nationally, we have 2 million Americans who use EarnIn to access their wages on their own schedule. The manner in which our product works is to direct a consumer on an app, so long as you have a job and a bank account. Utilize that app to access your wages early before payday, because as some of us may be familiar, the payroll system is quite cumbersome, and it is not particularly easy to get your bills paid when they arrive in conjunction with you getting paid. So we provide the funds early for you to do what you need to do to live. The manner in which it works, for just further context, is once you receive the funds, the day you're paid is when the advance wages that we offered are returned back to us. The two ways in which we make a profit are, if you want your money immediately, there's a fee for that ranges from $1.99 to $3.99. And then also there's a voluntary gratuity, which is completely voluntary. And that averages around $2, with roughly 50% of individuals utilizing it. I'll pause there to see if my colleague Ben LaRocco has any further details to add.
Thanks. I won't. Just happy to answer questions and appreciate Eileen's explanation. Just say that, these amendments really are to line Kansas law up with other states that have considered this, ensure it covers all business models, and ensure it, the way that the law is passed is congruent with other Kansas law. So incorporating amendments from OSBC, Bankers Association, and other providers. So we're happy to take questions, and Ryan from Daily Pay can also talk about his business model a little bit as well.
Okay, thank you very much. Committee will hold questions until we get through the proponents, and then we'll make them available. Let's now hear from Ryan Naples, who is Director of Public Policy with Daily Pay Incorporated.
Thank you.
Ryan, are you with us?
I am. Can you all hear me?
We can.
Great. So good morning. I'm Ryan Naples. I'm from Daily Pay, one of several EWA providers or earned wage access providers that operate in Kansas. We've done business in the state since 2015, and we support House Bill 2105. So currently in the state, there are more than 42,000 employees that have used Daily Pay, and over 430 in-state businesses have offered our service to their workers. EWA is popular with businesses because it reduces employee turnover, absenteeism, and filling open jobs. So my company's in-house surveys have found that EWA reduces turnover by 45%, employee absenteeism by 38%, helps businesses and recruiters fill roles 52% faster, and employees are 3 times more motivated to pick up extra shifts. So while each EWA company is slightly different, we share a few key characteristics. So first, all EWA is based on wages earned. Workers can only access their own money they've already worked for. We are not providing credit or a loan. Because we aren't lenders, no EWA provider charges interest or late fees or considers creditworthiness for any purpose. We are also credit invisible, both in the beginning and the end of the EWA transaction. EWA products are also non-recourse. So if an employer fails to make payroll, the risk is on the EWA provider, not the worker. While there are usually some small costs associated with EWA, at least one no-cost option is offered by most EWA providers, such as instantly onto a debit card or via a next business day bank transfer. A nominal fee of about $3 for instant delivery to any bank account is also common and also never based on creditworthiness. EWA is popular with employees because it solves for a frequency of pay problem. It does not solve for income insufficiency, which requires creative and flexible solutions from both the public and private sectors. But EWA helps. Without EWA, available options to access funds quickly are very costly, especially without good credit. Put simply, we're good for people because we save them money. So Daily Pay's research from 2021 found we replaced payday loans for 21% of our users, saving people between $600 and $900 per year. 39% of our users had previously overdrawn their bank accounts, and 78% of users who had previously paid bills late had similar positive outcomes. So, as an industry, we're supportive of this bill's requirements of EWA providers that presently do not exist in Kansas state law. These consumer protections, as Ben mentioned, and Jay both mentioned, mirror existing Nevada and Missouri licensing laws. We believe it's necessary at this time for a maturing industry for like three key reasons, to be honest. So first, it would help prevent harmful overreaching regulatory treatment by other states and by the federal government that, while well-intentioned, would significantly harm consumers in the EWA industry and result in no additional consumer protections. Next, this bill does provide legal clarity that we are not loans for all actors operating in good faith, which allows for continued growth in the state. And finally, the bill creates a level playing field for all existing providers. So I'm grateful for your time today and your careful consideration of this bill. Thank you, Eileen, also for going over all of the different changes. It was a it was a masterclass, and I'm happy to take any questions.
Okay. Thank you, Ryan. Committee, let me call your attention to some testimony that we handed out. This was late testimony that we received this morning from Chamber of Progress. We will treat that as written only. We will now turn to questions for the proponents. We have the three gentlemen that we've heard from via WebEx. We also have Derek Hine in the audience if you would like to ask questions to someone in person. With that, I'll call on Senator Gossage.
Thank you very much, Mr. Chair. Just a clarification, if I could. I'm trying to understand, I understand your business, trying to understand how the underlying bill and then the balloon would help the business, help the folks that you help. Could you clarify why this is something that
Sure.
you really need to see passed?
Yeah, happy to take that question. Thank you so much, Senator Gossage. So, as a new industry, we don't fit very well into existing law, either in Kansas or in most states across the country. So, we are sort of at the combination of lending law, money transmission law, and payroll law, but we don't really fit into any of those buckets. So rather than try to force us into one of those buckets, we worked with a number of folks across the country, in Kansas and many other states to come up with this new regulation that really creates something different for us. So it gives us certainty, which as a growing business helps us. It helps give our business partners confidence that we'll be there, and it gives our customers confidence that we'll be there. It also provides them protection. Most responsible operators are already using these principles as best practices, but we want to make sure that bad actors aren't treating people in a different way that could harm the industry as it grows.
And I also should say, so we work directly with employers, so we're vetted pretty rigorously by like the in-house employer compliance team and the compliance lawyers. And so whenever there's a new licensing law, they're going to look really closely at it before they agree to really let us integrate with their payroll and time and attendance system. So the more similar that the licensing laws look, the better it is really for, I think, just not just consistency and efficiency, but for growth of our maturing industry, if that makes sense.
Okay. Committee, are there additional questions of the proponents? Senator Warren.
Thank you, Mr. Chair, and thank you for your testimony today. And this is for any of the conferees. I'm not quite understanding how the consumer is involved in this transaction. It seems to be a relationship between, you can't even really say employer if you're working with an independent contractor, and the consumer, and I heard an app for payment. So how is the consumer
Sure.
in Kansas involved in this transaction?
So
Please
we
identify yourself again.
Right. So at Daily Pay, so we sign contracts with businesses. So Target is our largest customer, Hilton, Kroger's. United Health, and then we take 4 to 6 weeks to integrate with payroll and time and attendance. At that point, the any employee who works for that employer can download our app onto their phone. We usually get about 36% of people deciding they want to download our app. Then people can look at how much they make over the course of one day and the course of a pay period. Our app updates 4 times a day, and because we're integrated with payroll and time and attendance, it's net pay. So it's not like, the result is not like when I've had my first job as a lifeguard and I was very upset that I didn't make like a clean $6 an hour, but I made like $4.17. So the once people are on our platform, they can do a couple of things. And about 50% of people just look at how much they make and don't do anything. Everyone has access to a free counselor, financial counseling and coaching session through a nonprofit that we have a relationship with. But then the other half of the people on our platform do choose to access the wages that they've already earned. So they can send it to a checking account, a savings account, or our debit card, which is called the Friday card. And the only thing that has a fee attached to it is if they want it instantly sent to their checking account, and then it's a $3 to $3.50 fee. So that's the way like our business is structured. And Ben and Jay, I'll let you guys talk about how earning is set up.
Yeah.
Well,
Senator Warren, does
so-
that answer your question?
Well, so consumer in this doesn't mean the person buying groceries at the store and paying for them. The consumer is the employee or the independent contractor who has signed up for this app?
No, they're employees. So they are employees that are right. So consumer means the workers who work for Target and like the workers who work for Hilton and Kroger's and United Health.
Okay, thank you. And
Yeah.
then one other question. I see all our conferees are either from Palo Alto, California, New York City, or McLean, Virginia. Did you talk to Kansas businesses or?
Yeah, so we do have 430 businesses that are in-state Kansas businesses. So Target, Hilton, and I believe DaVita Dialysis I think are our largest Kansas employers.
Thank you, Mr. Chair.
Yeah.
To save time, committee, we're going to turn our attention to the opponents. I know there are probably additional questions. I'll ask those representatives that are representing these companies to circle back with the committee and make sure that you have comfort. But I do want to make sure that we get to the opponent on the bill, and then we've also got one more bill to hear after that. So let's turn our attention to Brock Roller as opponent testimony with the OSBC.
Thank you, Chairman Lombine. Actually, I was only going to submit written testimony, and our position is, as the bill currently exists, we are opposed, but with the balloon amendment, we would be neutral.
Okay, very good. Appreciate that, and sorry for the confusion. That didn't take as long as I anticipated, so maybe we circle back with another question for the proponents, Senator Cluse.
Thank you, Mr. Chairman. Just trying to follow this. The question would be, does an employer have to agree to this if an employee wants to do this program?
So, yeah, so with our, there are definitely two different models. So with our model, an employer has to agree to offer it to everybody who works for them, right? So like that's like the one barrier to entry. But Ben and Jay represent a company that has other options.
Senator, I think your question is this a mandate on employers? And the answer is no. Employers can choose to offer this service if they want as a perk. And with Earn-In, an employee can use it without their employer having to agree to it. We just offer it to them, just like you would buy a third-party health insurance if your health insurance isn't offered through your employer. So there's no mandates on any employer or no requirements that an employer would have to do it if their employees want to use the service.
Okay, one more additional question? Anybody? Senator Gossage?
Thank you. Just a quick question, if I could, and it's actually for the opponent. And my question was, can you tell me what in the balloon has caused you to be in favor of that as opposed to without it?
Thank you, Chairman Gossage. One of our biggest concerns with the bill as it was brought to this committee was there were certain individuals we could not do any background checks on. And that's obviously very important to us. And I think my testimony explains all the changes that we asked for. And it's my understanding that they're all included. There's a couple other things. We wanted to be able to use the nationwide multi-state licensing system and registry. That is something that is used by our consumer mortgage lending for all of our licensees. And I believe Nevada already requires it, so it's not a huge ask.
Thank you. Thank you, Mr. Chair.
Thank you, committee. I know this was a little cumbersome and a little awkward, but I still think it was the best way of trying to get this across. We will close the hearing on House Bill 2105. We will now open the hearing on SB 423. Eileen, can you give us an overview?
Thank you, Mr. Chair, members of the committee. Senate Bill 423 would grant the Commissioner of Insurance the ability to decrease the number of appointed board members on certain boards that fall under her jurisdiction. For each of the affected boards, the appointed members would serve a term that would end on December 31st of this year. So if they're already on a board currently, their term would end at the end of the year, and then the commissioner would then newly appoint a board with members having terms of 3 years. In appointing the respective board members, the commissioner shall consider if foreign and domestic insurers are fairly represented. Each board would have the same powers, duties, and functions as it had previously, except that now board members would be able to be removed for inefficiency, neglect of duty, or malfeasance. The affected boards appear separately in the sections in your bill. It's very repetitive, which is why I just described all the changes at the front of this, but the affected boards are as follows. In Section 1, it's the governing board of the Automobile and Motor Vehicle Bodily Injury and Property Damage Liability Insurance Plan. Section 2 is the governing board of the Workers' Compensation and Employers Liability Insurance Plan. Section 3 is the governing committee of the assigned claims plan for personal injury protection benefits. Section 4 is the governing board of the plan for equitable apportionment of risk among insurers of applicants for professional liability insurance. Section 5 is the governing board for third-party liability insurance plan. And again, if I didn't mention this, but in the brief it lists the boards, their current members, and the fact that they would decrease to 5 members. Section 5, is as I said, is the governing board for third-party liability insurance plans. Here, I want to call out that I need to make a technical amendment. If you look on page 12 of the bill, in lines 28 and 29, in my brief, I say 28 and 28. That was a typo, and I apologize. I somehow managed to miss the fact that in line A, in paragraph A, I say one representing domestic or foreign. I needed to say one member representing, and I missed member in all 3 of those sentences. So my technical amendment would be to add that word. It doesn't have any legal significance. It just makes it more clear. And it is a technical because there is no legal significance. And just as a PSA, only my office can make the technical amendments. No one else can. Sorry. I digressed. Lastly, the bill also removes a requirement for the Committee on Surety Bonds and Insurance to meet at least once per month. Meetings will remain at the call of the chair. And with that, Mr. Chair, I can stand for questions.
Thank you, Eileen, and thank you for the definition of a technical amendment.
You know I've been waiting to do that.
I know you have, and I see some members of the audience that have their head down.
Cringing, totally cringing.
Committee, are there questions of Eileen? I see none. Thank you. We will now turn our attention to the proponents, and we have Kyle Strathman with the Kansas Insurance Department. Kyle, welcome.
All right, thank you, Mr. Chairman. Thank you, members of the committee. My name is Kyle Strathman. I am the Public Affairs Manager for the Kansas Insurance Department, and I am appreciative of the opportunity to testify in front of you today on Senate Bill 423 in support. This is one of the department's agenda items this year, so I do appreciate you taking the time and hearing it. And in the interest of the committee's time, I think Eileen gave a great description of what this bill essentially does. I'm just going to spend a little bit of time here sort of breaking this down and understanding what the department's intent with this bill is. And with that, I'll start with, there's really two parts of this piece as you heard, or of this bill as you heard. The first part I'm going to touch on is the Surety Bond Insurance Committee. And that, the piece of that bill, the Insurance Bond Insurance Committee is a 4-member committee here at the state. It's chaired by the Insurance Department, the Commissioner. It has a representative from, obviously, the Insurance Department, the Attorney General's Office, the Treasurer's Office, and the Department of Administration. And what they do is they meet fairly regularly to discuss any procurements of insurance contracts for the state. So they try to find a sort of negotiate those for all state property rather than having all state entities sort of go out and do their own. And obviously the surety bonds piece. So the way that stands now, that committee is required by statute to meet, I believe, on the second Monday of every month. I can tell you, in talking to our representative from the insurance department, they are meeting next Monday. And just to give an example of why we're seeking this, the only thing, or one of the few items on their agenda is the discussion of this bill. So we think that it's really just meeting for meeting's sake on this piece. They still have the ability to call at the chair, and when business does arise, they handle that business. They do frequently meet when it's necessary. We just think it's an inefficient use of their time to have this standing meeting when they don't really have regular business to discuss at those. So that's what that first piece of this bill is seeking. Second, and this is the more substantive piece of the bill, is of course the board reduction piece. And what I'll kind of highlight without going over all of these boards individually is that all of these boards oversee plans that can be described as insurers of last resort. And I'm sure, as many of you are all familiar, where an individual or a company who needs a particular type of insurance and is unable to get it through the regular market, these plans provide an opportunity for them to gain that insurance. So that's really what we're talking about focused here. We're also focused on these 4 boards as they are the only, the commissioner is she is the sole appointer of all the members of these boards. So we're not talking about anything outside of that authority. So in seeking these reductions. Up front, really the department is seeking this bill. We believe that there are, by having these reductions, quite frankly, there's an opportunity to create more efficiency for these boards and the plans they oversee, and then also more accountability where there currently really doesn't exist. We think these reductions are going to result in some immediate cost savings to the plan. And we think that's certainly worth pursuing. And I'm sure many of you heard the commissioner testify before, how she is very serious about lowering the cost of doing business in the state and making government as efficient as possible. And this bill is very much a reflection of that desire. So last year, the department was involved in overhauling the operations of the Kansas Automobile Insurance Plan and the Automobile Assigned Claims Board. The result of that overhaul was a transfer of the administration of the plans to APSO, which is a third-party administrator for these types of residual market plans. I think they do that in over 30 states. That transfer is going to result in a reduction of over $300,000 minimum annually, and this is really an example of the kind of savings that we think are out there with the operations of these boards, and that's really serves to highlight why we want to focus on the reduction and pursue some of those savings. Another one of the issues that this bill will help us address is that it can be often very difficult for the department and the commissioner to find somebody who, when we have a vacancy on one of these boards, find somebody who is, number one, qualified in the requisite subject matter, and then number two, both interested and willing to serve on that board. Currently, I believe we have, of the boards that we're discussing with this bill today, we have 3 vacancies that are open. One of those has been since 2020, I believe. And we anticipate, as a lot of these appointments expire in July, that we're going to see an increase in those vacancies as we just lose some members to natural attrition. So obviously, by having less positions to fill, that obviously makes it a lot easier for us to go out and try to fill these. So I think that that's another purpose of what this bill seeks to correct today. Additionally, there's also currently, in current statute, no mechanism for a removal of a board member other than their term expires and they aren't reappointed. So we think this is a necessary addition, and we think that by adding the removal language for the inefficiency, neglect of duty, and malfeasance, this gives an appropriate level of oversight for the commissioner and the department. And hopefully it's a rare event that you would ever have to actually exercise that power. But currently, if we had a member who, fails, once appointed, fails to stop coming to meetings, or they, commit a crime, or even that we would not have the commissioner would not have the ability to remove that board member until their term expires. So we think this is very reasonable. We've tried to be kind of hit a middle ground with the language here, and try to not be overly broad with that. And we think we've done that, and I hope you will agree with us. Bottom line with this bill, and I'll stand for questions obviously, is that the department really believes that the functions of these boards can be carried out just as efficiently with less membership, and the result of that is going to be a reduction in cost for the plans that they serve. If the State Finance Council can handle the state budget with 9 members, we definitely feel pretty confident that most of these boards can handle their business with 5. While most Kansans, as I was preparing for my testimony last night, I asked my wife if she had ever heard of, or if it meant the words underground storage tank liability board meant anything to her. And she, looked at me like I was speaking another language and then gave a curt no. So I feel like that's a fair barometer to say that most Kansans aren't concerned, they don't lose sleep at night thinking about if these boards are run efficiently. But they do serve a very important purpose in the insurance marketplace, and the plans that they operate obviously are very important to that marketplace. So we believe that if you choose to pass this bill, you're going to create efficiencies, you're going to lower the cost of doing business, you're going to encourage active participation from board members, and then you're going to provide an increase in accountability for these boards where it doesn't currently exist, so they can better serve Kansans and then reduce government all at the same time. So, Mr. Chairman, I will. That sort of concludes my testimony, and I will be happy to stand for any questions.
Kyle, thank you very much. Committee, are there questions? Senator Gossage?
One small one. I see in the opponent testimony they worked with you on this, but the concern was they were asking for 7 members instead of 9. Can you tell me why that wasn't done?
Yeah, absolutely, and thank you for the question, Senator. We certainly worked with industry in crafting this bill. We always do, and one of the things that was expressed to us when we brought forward that we were looking at these reductions was they wanted to preserve the ratio, or essentially the categories that already exist on these boards. So, for example, there's a category for domestic insurers, there's a category for foreign insurers, there's a category for agents, and then some boards have different varying ones, but public member, for example. In order to, reduce those reduce those down, it was not possible to preserve that evenness across the board, so everybody, has the equal voice and representation isn't diminished. It was not possible to do that on all these boards without going down to where we ended up. There is some language that we have included in this bill that has been an industry request. There's a piece that gives us the flexibility to decide if the domestic or foreign insurers are fairly represented. That was an industry request. We were happy to implement that. The terms, setting the terms for 3 or 4 years was an industry request. We were happy to accommodate that. But to answer your question, we couldn't do so categorically, and we just didn't feel like it was our position to, if we did do, one or the other, we didn't want to choose winners and losers on the industry side for that. So that's the reason.
Thank you. Just wanted to give you an opportunity to respond. Thank you, Mr. Chair.
Thank you.
Okay. Committee will call your attention to neutral oral, or was going to be oral testimony from Marley Carpenter, representing CAPSIC. She got tied up in another hearing and requested that become written only. With that, we will close the hearing on Senate Bill 423. We will not work tomorrow, and we will not work Monday, but Tuesday we'll start with the UCCC bill for 2 days worth of hearings on that. So we're adjourned.